What's going on, guys? It's Killer. Welcome back to the channel. Now, it has been a while since I last uploaded, and well, the reason's quite simple. In the past 3 weeks, we haven't really done anything apart from ranging within this lower region. Now, I will be covering my plans, my analysis, some fractal analysis, some historical price action comparisons as to where I think we are positioned now throughout this cycle. I'm going to be covering primarily the higher time frame, but also what we could see developing in the next couple of weeks or months. So let's get started. Now, you already know by now, most bear markets take around 300 to 400 days to form. Now, I do expect this to eventually shift, right? We're no longer going to have these 400 day bear markets. I think we're going to have shorter bear markets, similar to the S&P, where we obviously have 200, 300 days of downwards movement, and then we trend back upwards. So if we start measuring the all-time high to the all-time, well, where we are now, right, we can see we're 160 days into the bear cycle. So we are technically about 60% of the way there until we macro bottom based on historical price action. So what does that tell us? I've seen a lot of people call for bottoms around here, and don't get me wrong, buying around 60k or buying around this area is going to be very good long term. However, what can we see from a structural perspective? Well, the market's going through different stages, right? We have our distribution, we have our legs down, we have our redistribution, we have our legs down. Now we are in another redistribution range. Why are we in redistribution? Well, because we are in a downtrend. We are minus 52% from the highs. The timing doesn't make sense for us to bottom precisely here either, meaning that we could be ranging for quite some time. We can see we've swept the current highs. We've had one wick down. We created a higher low. Now we're pushing up to this region. So what can that tell us? Well, we can see that we have had 7 to 8 green daily candles. Usually when we have candles like this gradually moving to the upside, we usually see a retrace around this area of resistance. However, that's not the only thing I'm paying attention towards. Obviously, we have the 14th pivot. We've hit that 14th, and in fact, we pushed towards the upside for the first time around one of these pivots in 7 months, because we can see, based on previous analysis, we've pushed down nearly every single time from this pivot here as well. So first time we're seeing something like this. However, at the moment, if we're looking on the lower time frame, we have a CME gap at 71.4. That is almost definitely going to get tested, right? We are definitely going to test this region at some point. However, the reason why I'm creating this video is because I want to compare previous price action from what we've seen in the past. So let's switch over to two charts and I'll show you the exact comparison I'm looking at. So initially, I thought that we were positioned around this area of the cycle. The reason why is because we had the deviation above, and if we compare this current cycle, we are mimicking a very similar pattern, right? We can see we have deviation above, leg down below this area here. If we look at the previous area here, we were consolidating around these lows for quite some time before the next leg down. However, if we start analyzing the price action on the lower time frame, we can see, well, we had one sweep, we had the acceptance below, we didn't create a new high, and then we pushed all the way back downwards. And if we start comparing that to where we are obviously now, if we are to be around the same area, we can see we've in fact had a different schematic play out because we've swept the high rather than accepting back below the previous range, meaning that there is a potential possibility that we are not within this fractal and we are somewhere around this lower end of the region of the fractal, meaning that we are going to have months of chop before obviously the bottoming zone. Now, if we start measuring the moves from the wick low all the way to the wick high, we have about a 58-day interval before obviously pushing to the downside. If we start measuring where we have that capitulation wick, we have that 82 days afterwards. If we start measuring where we are now from that capitulation wick to where we are now, we can see that we could be ranging within this upper region or this upper box for quite some time before obviously we start pushing towards the downside. And the reason why I believe we could also be here in the fractal is because it's quite simple, right? If we start looking at the price action from the higher time frame perspective, we can see that if we are positioned precisely on this wick here and we measure to the current low, that gives us around 145 days to form our bottom. If we measure where we are now, 145 days, that would put us precisely at around the July area. Now, do I think we are going to form a macro bottom precisely here? No, but I do think this is going to be the area where we start forming that bottoming zone. And we can see just by measuring how many months we were in this lower range before obviously having the bull market continue or the bear market rally in a way, we can see 2 months. Now, if we measure 2 months on top of that July, that puts us at around August 30th, October. That means that we are probably going to bottom around this period here. Now, if we were part of this part of the fractal here, that would leave us more time to bottom. However, it doesn't really make much sense because my entire thesis here is that we're going to bottom sooner than in previous cycles, meaning that because we are no longer inheriting the same characteristics of this fractal, we could easily be within this range here, where we have multiple deviations towards the upside before obviously having that leg downwards towards the downside and forming that macro bottom. Meaning that what I'm expecting could develop here as a potential scenario is we see multiple hunts, we have some rejections, multiple hunts, and then we have this slow bleed price action back down. We range for some time, then we have the capitulation below this range low, and then once we have that capitulation and we reclaim that area like this, we look for them long positions to obviously counter the trend and push towards the upside. So that is my entire thesis at the moment. I think there's a very high chance we could be within this box here. And if we start zooming down to the lower time frame again, where we are positioned, we can see we have our range high here. And if we start comparing to the relevancy of where we are now, we have our first range high, which is around here. And we can see we had wick one. We had our first high above, formed the higher low, formed the higher low. Now we're around this area again. We can see here we had three drives of the highs last time. Now we don't have to 100% do the exact same pattern as what we've done in the past. However, what I look for is the same characteristics, right? I'm looking at how the price action is forming. I'm looking at the cycle positioning. I'm looking at the time-based analysis perspective of things and where we could bottom and where we're most likely to bottom. And I don't think we're going to bottom here. And the reason's quite simple because we're only 150 days into the bear cycle. For us to bottom here, it's essentially meaning that we are bottoming 2 times faster than in previous cycles. And until we decorrelate from this 4-year cycle, there's no reason to think it's broken. As I've said, I do think we're going to bottom sooner in this cycle than previous ones, but it's not going to be at the 150-day mark. I think we are going to bottom in 4 to 5 months. So, if we are around this price region, expect multiple deviations around the highs. We could even extend up to here, right? Everything is a possibility here. We could extend up to this 76 to 80k region before obviously pushing down, right? We could see here we had a push down, we had another push down, and then we had another push up, and then we could see diagonal resistance, and we can see the exact same pattern play out, right? So these are all possibilities. However, as always, it's important to observe the higher time frame, and the reason's quite simple. If we start looking at the overall trend on the weekly and the monthlies, well, we can see we are obviously in a downtrend, right? This is not an uptrend. We can see we had the capitulation wick, we had 1, 2, 3 weeks of downside, we had one massive wick towards the upside, swept the highs, and we had major control through bears. We pushed all the way down, closed very bearish, but we did have an imbalance. And when we have a long wick like this, we can hunt liquidity. Next candle opened, we pushed all the way through, filled this entire wick. This wrecked a lot of participants. And now we see our current weekly candle opening here. So theoretically, if we cannot get above this previous wick high here, and we can see we do have an FEG which does extend up to 75.5, if we can't get above this region, well then quite frankly, we're going to push all the way back downwards. And that's just simple candle range theory analysis. Obviously, we pushed up, swept the high into the new weekly open. If we can't get above this, we're going to push all the way back downwards. Also, we start looking at higher time frame SRs as well. We had our significant low, which was broken here before. We have another significant swing low, which is around the 80k region. So technically, anything within this upper region is going to be that bearish territory where you do not want to obviously be looking for long positions because then you're countering the trend. The only thing you'd be looking for if the trend shifts is we need significant force above. We need acceptance above the 75k area here like this. And then that would mean this is reaccumulation before expansion up to here. That is the only scenario which is bullish. We need to push straight through to 80Ks. We need to accept above the previous range low, which is around that 74K, and then we could push upwards. But again, we are in a bear trend. We are 150 days into the bear market. So this isn't a scenario which I'm 100% favoring. Why? Because, well, the trend is bearish. We are in a bear market. And statistically, we bottom after 350 days to 400 days. We are at 160. So there's a significant difference in the timing of where we are positioned as well. If we start looking at a previous range in the past, it took 210 days for Bitcoin to form a bottom, right? Why does it usually take this long to form a bottom? Well, it's quite simple, reaccumulation. When you're trying to scale billions into the market, you can't just fat finger a big buy position. You need to set limit bids. You need to scale in gradually, meaning that we are likely to have some sort of a range form, which would be something like this, before obviously having the capitulation below the range low. And then obviously we have that expansion and do something like this, obviously, over the next 2 to 3 years. So this is my overall plan. I do not expect a V-shaped recovery, which goes to new highs. I expect something like this to develop because it's the most logical scenario. Invalidation of my bearish thesis would obviously be a 1 week close above the 80k region, and it's quite simple as you can see here, because if we get above here and we hold this previous wick low, well then we have bullish structure rather than bearish. That would invalidate my bearish thesis, but until then we are still in a bear market. The trend is still bearish, so I am going to treat it as such. If the trend hasn't changed on the higher time frame and we are at lower time frame supply of the current range, there's no reason for me to be significantly bullish. Obviously, if you wanted to be bullish, it would have been around the 60s to 65k region, but not around here personally. As you can see, we've had 5 months of red. Now we are seeing this little movement and people are getting a bit euphoric despite the overall trend. So again, make sure to validate the higher time frame picture. And don't think that the market has to bounce, right? The market doesn't have to do anything, right? We can see here we had significant downtrend. We had a retest. We had significant downtrend. Then we had small candles forming that bottom here, which is something which we could see develop now. So just because the trend is down so badly doesn't mean we need a steep retest to just go back down again. The idea of a bear market is to make people capitulate. You don't make people capitulate sending the price higher when everybody's been trying to buy this entire drop. You send it lower. Anyways, that is my thesis at the moment. A lot of you know that I'm already in a short position on Bitcoin from 72.8k, and I'm looking to build obviously up to that 76.5k region. I have adjusted my 75.6k short limit, but this is my overall plan and what I'm expecting. I have a stop loss above 80k. This is a 1 week close above a SSL. This is the trade which I'm taking based on my plan and analysis. Anyways, I hope this video has given you a clearer understanding of what I expect. Catch you guys later.